Hey everybody, welcome back to another video on the channel. It's actually Juneteenth, and yeah, today is actually June 19th. So the market is closed today. So I just want to go over the three main things that I trade and just sort of give you a breakdown of them, and maybe we can talk about one of those things. So I trade number one, liquidity; number two, market structure; number three, supply and demand. Those are the main things I'm looking at when I'm looking for trades. So let's just see if I can show you guys those three things. So number one is going to be liquidity. Let's see if I can just show you some quick examples of liquidity. Here's one right here. Money. When you hear the word liquidity, think money, think orders. I like to do it on my charts. I'll draw this right here. When you see that money symbol, that means it's liquidity. Eventually price is going to come down. Eventually price is going to come down and get that liquidity. And as we can see, price did come down and get that liquidity. So once it got it, we can delete it. Boom, liquidity is gone. Let's find you another example. Look at this right here. From this line all the way right here, see how it's sort of like a boundary, or it's like a wall. Liquidity. Eventually price will come back, and oh, look at that. It actually, instead of getting it all, it did this. Instead of that line, it just did that, and it became this liquidity. So still bouncing off that line, and as you can see, price eventually came down and grabbed all of it. Now we can erase. Number two, market structure. The simple thing with market structure, you only have two. You have a bullish market structure and you have bearish market structure. Yeah, sometimes it fluctuates and it kind of stays still, or it plays around. I don't want to say that it's building liquidity, but that's kind of how I look at it. So either price is moving up, it's moving down, or it's playing around. Bulls means we're going up, we're making money. Price is going up, price is making higher highs, lower lows. So you start at a point and you go up, you make a higher high, but then you come down and you make a low, but then you go back up again and you pass your former high. So you make a higher high, then you come down, but you do not pass your former low, you make a higher low. So bullish market structure is just higher highs, higher lows, higher highs, higher lows, higher highs. That's bullish market structure. And then bearish market structure would just be the opposite. You start at a point, you go low, you come back up a little bit just to breathe, then you make a lower low, then you go up high, you make a little high low, but it's not as high as the previous low. It's a lower high. So you got a lower high, then you come down, you make a lower low, then you go up, make a lower high, you make a lower low. This is market structure. Market structure is keeping this pattern. That's all market structure is. And then the last thing I want to talk about is supply and demand. So we can actually use these lines we just drew. I'll use the bullish market structure just because it's easier for some people to see using bullish. It's two things with market structure. One is supply and demand, and then the other is what I like to consider if it is valid or if it's invalid. So this first area we're going to mark is going to be your demand zone. This is when price comes down here or gets near this area, there's some demand. Means we got a lot of orders for price to be bought, and people are expecting this to go up. Notice how here, when we start to get close to that demand zone, we went up because people are buying down here and they're expecting to go up. There's a high demand up here, and the more people buy, the more you can charge for something. So the more people buy, if we can charge more, then price goes up. This would be called our supply zone. It means supply means sale. That means it's too much. I've got too much, we've got too much, we sell. price should decrease when you get near sell zones. It's the most basic definitions I can try to think of just off the top for supply and demand. You could think of supply as your ceiling, and you could think of demand as your floor. You can use those terms to pretty much get a basic understanding of it, but demand and supply is a better terminology to use. We start off right here, and I'm gonna actually use a white dot. Boom. We start at this point. So we go up, and I'm gonna kind of mark right here. We make a higher high. Oh, we come down. We make a lower low. Let's go up a little more. We made a higher high up here and a lower low. Since it's the same low, we'll just move that low over here. So we didn't break structure. The structure's the same. We're still bullish right here. In the most basic form, that is our demand zone. So if price gets near here, it's gonna go up. Another demand zone that we can look at is actually right here. And this is when I was talking about valid versus invalid. We started at this point. This was our higher high, and we came down a little bit and we made this low. This was our higher low. At this higher low, we made a higher high, which is up here. So because we broke our previous high and we made a higher high and we kept on with the pattern, we'll call it a demand zone, because here we bought price. We liked the price, we bought it, and we continued the pattern. We can consider this demand zone valid because we made a higher high. We broke our previous high. And we'll call this a BOS, which is a break of structure. We'll talk about that later. Because we made that BOS, we know this demand zone is valid. So if price comes back here, we know that price will more than likely do the same thing it did the former time. More than likely. It's not 100% guaranteed, but it's more than likely gonna happen. And as you can see right here, what did price do? It hit that demand zone. It came back. When we're making these higher highs, just like we have demand zone at our lows, we have supply zone at our highs. We'll label that as a supply zone. This is our high. This is our highest high of the pattern as of right now. So it's just supply. It's the supply. So if we get near this point, until we break it, this is just our supply. So price may react here. It may do something here. We're not really sure. And as you can see here, right here, price reacted to it. It reacted to it the first time with this white candle, these 2-3 candles. And then right here again, it reacted and it fell from that. So with this first fall, we know that this zone may be accurate. We know that something is about this zone it might be good. And also you can see look at this big candle right here. Look at that momentum and that volume. The stronger that reaction to a zone, the more valid you know it is. Now look at this. We came back to the zone. We had another reaction. We had another touch. We had a touch. We had a touch and we fell down. We came back again. We had some touches and we fell down. The more touches that you have to a zone, the more valid it is. Really, I wouldn't consider this zone valid until the third touch, which is I would consider this entire little block right here. So demand zone is at the bottom of our pattern. This is a bullish pattern, bullet market structure. We made a high, we made a lower high. This is now a new demand zone. Now we made a higher high. This is our supply zone. Well, you could say that we had a supply zone right here on this first high. But when we broke through that zone, it's no longer our supply zone. It is something else, but I don't want to, for right now, I'll just remove it not to confuse you. And then we made the higher high. We kept on with our market structure. So we'll just keep that for right now. If you guys have any questions or any concerns, anything you don't understand, drop a comment. I'll do my best to explain it as I know it, as I see it. Really hope you guys enjoyed this video. There will be more videos about trading and investing and things like that. There'll be a lot of variety on the channel, but if you like this video, subscribe to the channel. So until next video, see you guys later.